Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video and subscribe to the channel if you haven't done so already. These take a long time to make, and I make them for you guys, so definitely please like the video. I did finish the week with 15 wins, 4 losses for a win rate of 78.95%, a little below my 85 weekly goal average, or target I should say. Didn't do as great as I hoped. It's still a pretty good week. Mondays have just been very tricky for me. I go up and down with Mondays. For the longest time, the first trade of the week on Mondays, I would lose just about every week for like month plus. Then I get out of that. Then lately, the Fridays I've been struggling with. Then this past Friday, I did really well, and I took the first loss was on the Monday, the first play of the week. So it's just up and down. It's part of trading. I don't know what it is. It's just is what it is. So there's no rhyme or reason. It just things happen, and coincidentally they just happen the way they do, and you just need to adapt and adjust and plan accordingly. And I think that when I was taking losing trades on Mondays, I was just waiting out the first half an hour. So it is what it is. So you're just going to adapt to anything that you start seeing develop as a pattern. So trade ideas room Monday morning. What did I say? What was Monday the 14th? Yeah. SPY puts under 444. Now let's get SPY up here, which is right up here. Let's see, where is it on the hourly? Yeah, see, SPY is pretty elevated. I'd like to put the call ratio with no, the put to call ratio wasn't high yet. I think it was just let me look at the daily. The 14th, yeah. It's in a downtrend, and it's at the gap fill. I went and tried to fill the gap a little bit. So I think it's a few pennies off. So I was looking to see if it would finish filling the gap, but it didn't quite do that. Well, it did. I mean, throughout the week, but it gapped up. This was what we tried to fill the gap, but it didn't. It gapped up, and it started to sell off. Then it was choppy down here, pre-market. So I said 444. I was pretty much the low down here. I mean, I could have got 43.50 for an area, but that's $1 away. So I was looking at it. Like 444 looked like a pretty good area. So it had some congestion in the 444 area. So that's why I picked that number. Then they had the green candle right here. I probably should not have even looked at puts. We got a strong green, especially after this drop right here. For some reason I just thought it was going to break down more, but I should have known with this drop right here. We dropped from what, $3, almost like $2.50, and it opened. Everyone jumped into puts and it popped. I should have saw that coming. Normally I do. I don't know why. This might have been in tunnel vision mode, but first 10-minute candle was green. I grabbed 445 puts at 690. Right when it broke low a day. To me, I was also kind of looking at it from the point of view that because it did a fake out and came quickly down to low a day, they've been faking out a lot. Like at the first 10-minute candle is green. The next 10-minute candle, it will break high a day for a second, then it will dump. And if it does fake out like that, grabbing the other side of it has been the way to go, minus this day or this trade. And I did grab that because it faked out and because I was looking at puts and it broke low a day. So I had three things I was looking at, and so I took the puts, and right when I made new low a day, it just popped. So then I ended up stopping out. I grabbed the 45 puts at 690, and I stopped out at 2, and it just raged. But then again, I took calls at 1034, which is right here. I didn't want to chase this move. I know you get 3 massive green candles. I don't want to chase that. I'd rather buy it up here than right here thinking I'm chasing. The reason is that when you get too many big green candles in a row, you're going to get a pullback. And if you buy it up here, you're probably going to get stopped out and it's going to pop again. So this is a perfect FU setup right here. Bunch of green candles. You get a first 10-minute red candle right here. As soon as it broke high a day, that's where I grabbed the 44.75 calls at 660, and they went from 660 to 14.75. These FU plays are like money. They almost always work. I think that if you were to look at the statistics of them working, is very, very high, because it's a pretty good setup. Because you get these like really long exaggerated plays, and it needs that 1 10-minute candle to close red to show signs of weakness, show signs of consolidation. And once it has that, then it ends up taking off in that direction, which is the upside on this area. So if this 10-minute candle did not print red, the 10-minute candle must print red in an up direction. If it doesn't print red, I'm not touching it. But it did print red, and that's where I took it. So that ended up being a really, really good play. Then it took calls again at 11.29, which is probably right here. Yep. The good thing that I like about when I do these recaps is that when I see like I took a play at a certain time, I should be able to look right at the chart and say I took it right here without even looking at the time. And if I can do that, if I can look at the trade and look at the time, and if I can look at the trade and look at the chart and say this is where I took it, and then go down and reference the time, it's like, yep, I did it. I picked the trade perfectly right there. Especially after like a few days or a week, doing a recap of something a week later, you can see exactly where you took it. Now, if I said that I took it like right here, it make me scratch my head a little bit, because I took it right here. This is where I would take it every single time, and this is where I took it right there. So right over the 447.25 areas where I took calls, I took the 44.85 calls at 570, and they went from 570 to 820. So that ended up being a good play. Then I took puts at 210, which is probably right here. Yeah, right here, right down here. Yeah, right here. You can see the support here. You get the candle right here. You get the body right here. So I was looking, okay, if it gets below, I like it better under this candle, and then you get the wick of this candle right here. And it kind of lines up a little bit with these, not quite perfectly, but in essence, pretty close. So I did like it underneath 446.75. So I grabbed the 44.75 puts at 430, and they went from 430 to 540 right there. So I got a dollar plus move on that. So that ended up working out really well. One of the things that's been getting me a lot lately is like, normally I would look at this. If you start to show a little bit of weakness, like you start seeing a rounded top, normally I would take it like 447, we'll say 15. Then I would take it, and what's been happening lately is because I'm taking it too close to the top, that it drops just a little bit, then it pops, makes new high. So I've been kind of like waiting it out a little more than usual, knowing that it's been doing that for the last few weeks, and kind of adjusting to it. It's part of trading. You need to adjust to what is happening, and you need to make small tweaks here and there. Trading, that's just how trading is, and I recognize that pretty quickly, and then I just adapt to it quickly. So Tuesday, didn't do too well on Tuesday. I took 2 wins and 2 losses. Tuesday traded days room. SPY calls over 446.50. Got this run up overnight. You had this drop right here early in the morning. Then it dropped a little more. I called it right around here somewhere, right around 9 o'clock. So yeah, what did I say? 446.50, which is up here. This lower high right there broke over that. Then I would look at that. The first 10-minute candle did. I'm not interested. Didn't take it. Then it had a nasty candle right here. I did take it at 946. I took 4460 puts. I mean, you get the first 10-minute candle is green, and I was looking at calls, but it didn't make new higher day over this. So when it started to drop, I just took the chance and went with new lower day. It was going to be a nasty move, and it ended up being a nasty move. I had the 4460 puts at $7, and they went from $7 to $11.10. So I ended up working out pretty well in this. Another FU setup right here. These FU setups work brilliant. Big red candle, green 10-minute candle. Starting to look like it's going to bounce a little bit, and then as soon as it breaks below this candle right here, it dumps more. Did I even play the FU setup? No, I did not. I didn't play that. But this is another perfect example right here. I can show you these FU setups all day long, and they're going to be perfect almost every time. Right here. Right here. I took the next trade at what? 1059? It's probably right here. No, 1059. 1059. What did I do? 1059. This is what I'm talking about. This is why I look confused. I took 44.45 puts at 1059 at $7.50. I took it here. Was I thinking it was going to reject higher VWAP? Is that why I took that? And I averaged more at 1111, which was this candle right here at VWAP. So I had it at 750. I added more at $4, making a new average at $5.75. And I think, oh, I remember this. I remember this went green. This went green right here. And I think I was trying to sell over $6, if I remember correctly. And it got really close. I think that it got, I think $6 was actually on the ask. And it didn't print. It didn't, because that will happen sometimes where you have your sell set like we'll set this instant. We'll use this instant for example. I had it set at $6, I think, and the ask was at $6, and it didn't fill because nobody was willing to buy it at $6. And it must have been starting to turn right when it started to show $6 on the ask, and it popped on me. So I held it thinking it was going to dump, and then I ended up stopping out. Then I think it actually might have turned red. Well, actually, it definitely turned green right here. Yeah, I think it turned green down here, but I stopped out. I had it 575. I stopped out at 3. I didn't end up going green. I don't know if it went green here. I'm not 100% certain there, but it definitely went green down here. Anyways, I took puts at 1147. 1147. Right here. Okay, I went closer to my... Okay, so what I did was I bought it here. I added. They went green. I did not sell. It popped on me, and I stopped out. And when I stopped out, I reloaded instead of... Because I initially had 45 puts here. And I reloaded once it got below underneath this. I think I grabbed it underneath this area right here. See the wick? I'll kind of blow it up a little more. You see the body and the wick right here. When it got below this 44, this 444.75, that's where I ended up grabbing the 44.55 puts at 730. And it dropped a little bit, and then it popped and it dropped, and they went from 730 to 960. Kind of probably should not have done what I did here because it held VWAP and it popped a little bit. I don't know if I sold it here. I don't think I did. I think I actually sold it here. I don't remember, to be honest. I have to look at the thing, and I don't want to really spend too much time going through the exit, but I think I grabbed it here. I don't care. I can go look. What was that? The 15th? 1208. Yeah, so I sold it down here. Okay, so I did do that. Yeah, so I did drop below here to give me in. That popped up, and I sold when it dropped down here. So that ended up being a good trade. It just ended up being a kind of a dangerous one. I probably should not have taken that. Luckily, it paid off. I shouldn't have taken this one. I should have waited. I don't know why I did that. The only thing I could think of is that I was thinking that VWAP was going to reject, and VWAP's been really, really tricky lately. a year ago, months ago, several months ago, VWAP would act as resistance and support, and you could pretty much go based off that. Then for a while, anytime SPY got close to VWAP, if it was under it and it got to VWAP, it would rip right through, and if it was above it, it would rip right below VWAP. So you couldn't really trade as support and resistance VWAP because it would rage right through it. But lately, the last couple of weeks, it's been actually recognizing and respecting VWAP as support and resistance, which it hasn't been doing that in a long time. And then I must have just tried to front load, anticipating a rejection, and I just didn't work out. And I didn't sell it when it was green when I should have. So I made multiple mistakes right here, and I could have avoided that. And this was probably a mistake to grab it here above VWAP. Well, technically it was below VWAP, but I probably shouldn't have grabbed that after I just stopped out. So I don't know. That's kind of questionable too, even though it did pan out, work out, but it could have gone horribly wrong. So then I took calls at 127, which is right here. And I get why I took it here. It held this say 444 area. It dropped, bounced, and came back up to VWAP. And when it came to VWAP, I was thinking we were going to rip right through it. It didn't. It pulled back. It held the 444 again. It came to VWAP. I thought it was going to rip through here. And it didn't. It dumped, and it ended up being a loss. So it didn't work out. Tuesday, not a very good day. Tuesday was the 15th, right? Was Tuesday the 15th? Yeah. Okay. So Wednesday, trade ideas room on Wednesday with 16 SPY calls over 443.50. You can see it's kind of making a lower high, and I was looking at calls because it was dropping right here. And one of the things that I've noticed that is that when it starts dropping around between like 8 and 8:30, it likes to do the opposite for the most part pre-market. So like right here, it's starting to rise right here, then it drops. Right here, it's dropping and it pops. You know, it's been doing that a lot lately. It's dropping, then it pops. It's been doing that a lot lately. So that's what I've been kind of like going based off from. Make sure I get the right day, the 15th. No, not the 15th. 16th. 16th was FOMC day too. So I picked 443.50, which was right here. I kind of like rounded up to the to the half dollar. I kind of round up pre-market, whole dollar, or nearest 50 cents. Make it easier. This was FOMC. I didn't trade it. If you did use the 443.50 or the open range breakout off the strong green candle, that would have paid off. I didn't. I waited until FOMC. I actually had to leave FOMC. Wife had a doctor's appointment. So one of the things I was looking at, I believe RSI was really, really low on multiple time frames. So it was dropping going into FOMC. And usually when it's dropping going into FOMC, the reverse happens where it pops. And so if it was raging, I probably would have focused more on puts. But I know I normally do strangles on that, but because I wasn't going to be here, because my wife had an important doctor's appointment, I was more comfortable just taking calls. So I just made a one-sided SPX 44.20 calls of 780, and I placed it at 117, which was right down here. And I set a limit order when I left for $15. This felt like $15 was a good round number. Plus, it was right at the money. So if it made a small move, it would probably fill. And when I came back and looked, it didn't fill right here. The $15 didn't fill right here. It dropped a little bit. It filled when it came up to here. So those 780 calls went from 780 to 1550, and I managed to sell at $15. So I got so lucky. If I picked $16, I wouldn't have been able to fill it. But for some reason, 15 just sounded good. So at first I was going to set it for 10. Well, I was thinking about that before I left. I was going to set it for $10. I was like, no, I'm not going to set it for 10. They end up going almost 100%. So for some reason I had 15 on the mind, and I just set 15. And I set it, and I told everybody in the room that before I left, I was setting a sell order at $15, and I came back, it triggered. So I came back, and that was definitely a nice thing to see. Then I got back around 3, and I took a trade at 308, which was right here. Right when it broke lower day, when it broke the 441 area, I grabbed puts. I grabbed the 44.20 puts at 510, and they went from 510 to 1480 on that. So that ended up being a nice move in the day on that. So very strong FOMC day. Then we had put to call ratio very, very high on Thursday. And this was what was messing me up on Thursday. Put to call ratio was high. Everybody was on the put side. So I was expecting a short squeeze on Thursday, and we did not get it. Why do I have that? I should have that on the hourly. There's any reason I didn't. Anyways, it doesn't matter. I was expecting a short squeeze because put to call ratio was at 1+. Yeah, 1.03. So it was very, very high. I think the high was the second highest it's been this year. So I was almost certain. I was very certain that we were going to get a short squeeze, and we didn't. First candle was red. And then when I made new lower day after the first 10-minute candle was red, I took puts. I took the 44.05 puts at 720, and they went from 720 to 1030. So that ended up being a nice little play on that on the put side. I was kind of thinking that we were going to get a drop and a pop, a nice J hook, kind of like we had on Tuesday. This right here. What day was this? The 14th? Monday? Yeah, Monday. This is what I was kind of thinking what was going to happen. We were going to have a little J hook. We were going to drop a little bit, then come back up and just rage. That was my thinking on Thursday. So I was not afraid to go in and take puts at open. Because, I mean, I kind of was a little bit, but yeah, that first play took out. Puts play ended up being really, really well. I can't seem to talk today for some reason. My brain is working faster than my mouth. That's how I am in real life. My brain just works too fast. My mouth can't keep up. And then I took calls at 10:52, which is right here. Some reason I grabbed it. I can see why I grabbed it here. I grabbed it right here, right over 440.50. I didn't grab it over here. VWAP I was a little skeptical of, but if it got over these candles, I was thinking, okay, we're going to J hook right here because it starts to bounce, rejects VWAP, comes back down, flushes out stops because people probably saw the put to call ratio too instead of loading calls right here. So they flush out the stops, take out the call side. So this, I was more comfortable and more expecting that we were going to pop right here. And then it didn't. It just dropped more. So I had the 44.15 calls at 750. I added more at 1124, which was right here. I don't know why I did that. I should have just cut it. But yeah, I added more at 410, make my average 580. And then I end up cutting it at $3. Then it finally takes off right here. And then I finally take calls. Right? Let's see. 1055. Right here. Yeah, right here I took it. Okay, I do remember why I took it here. Now, I didn't take it here because I was afraid that it could have been a fake out because I was afraid that this was going to happen again right here. But this time it didn't. It actually ripped right through VWAP like nothing. Then it pulled back. So when it pulled back through VWAP and came back up, I was looking at it. I remember looking at over the body of these two candles right here. Over VWAP, over 440.35. So once I got over that, I took calls. I took the 44.15 calls at 530. And they went from 530 to 620. Not much of a move. Then it dropped. Then I switched to puts at 134, which was right here. Right when it broke lower day of the 439. That's where I took puts. I just had my blinders on. I had tunnel vision on. I was so focused on a short squeeze. I was expecting a monster move, a monster short squeeze. We haven't had a massive $10 short squeeze in SPY in a very, very long time. You look at the daily. I don't think we've had one. And this looks like right here. Is this a $10 move? 436, 7. I mean, that's a red. I mean, we haven't had a monster $10 run. Oh, 406, 412, that's 6. back here is the last time we had a monster 386, 396. This was the last $10 short squeeze day right here. And this was what I was expecting. See how it drops down, then you have the massive. I was expecting that right here. Because it kind of looks, well, it's an inside up right there, but I was kind of expecting this candle right here based off the put to call ratio. Last time put to call ratio was this high was at March, looks like 13th, which is 16th, no, 13th, which is right here. This is the last short squeeze day. The last time the put to call ratio was this high for 1.0 plus, and this was a range of 380 to 390. This is a $10 day right here. So I was expecting this right here, and it just didn't happen. So I had tunnel vision, and I just had the wrong mentality. But sometimes you just do, and I just did not feel comfortable getting on the put side too much. Then eventually I just said screw it, whatever, and then I took the puts right here. So that ended up working out pretty well. I had the 440 puts at 810, and they went from 810 to 1185. Then I took calls at 326, which is right here, right when it broke above this candle right here of 436.60. I grabbed 4370 calls at 590, and they went from 590 to 810. I'm not quite sure why I grabbed it there. Maybe I was looking at the RSI at that particular time. I don't know, to be honest. 436 had support on the hourly right there. So maybe that's where I grabbed it, was because of the hourly, because there's a pivot right here at the 436 area. So that's probably why I grabbed it. I probably had the hourly up, was looking at that. Maybe I had the 4-hour up. I don't know. I had something up. There's a reason why I took it there. But yeah, I can see right here, right over here. But anyways, so yeah, those calls went from 590 to 810 that I took right here, plus a nice tail candle right there. Those ended up doing pretty good. So that ended up being a good play. I could have gone horribly wrong. Then on Friday, what did I do on Friday? 4 wins. I actually had a good Friday. Friday traded his room. SPY calls over 436. Put to call ratio was still high. It's dropping, and over 436 was up. Huh? I say 436? Way up here. Why did I pick it so high up? Oh, because of this high right there. I see why I did. A little too high. Anyways, I was definitely more focused on the put to call ratio this day, especially after Thursday's drop. I was thinking, okay, maybe this is the day it's going to happen. Usually with put to call ratios that high, you'll see it within a day or two, usually that day or the next day. And sometimes the put to calls ratio needs to cool off. It needs 1 or 2 green days, and all it takes is one green day to cool them off, and this was the day it did. First 10-minute candle was green, nice big green candle. I took calls over higher day. Took the 43.65 calls at 720, and they went from 720 to 930. Then I took calls again at 1038, which is right here. Right when it dropped down, didn't break lower day, came back up. Once it broke this 434.75 area, I grabbed the 43.65 calls again at 640, and they went from 640 to 750 in that pop right there, and it started to drop a little bit there. Then I played calls again at 1151, which is right here. No, 1151 must have been right here. Yeah, it's right there. You can see the candle higher day right here, pull back. It couldn't make new higher day. It pulled back down to the 20 EMA. When it bounced off that, I liked seeing these two bodies of the candles right here. So once it broke over the 435.75 area. I felt like that was going to pop more. Still lean towards calls because 433 to 436, that is only a $3 push on a short squeeze day. You want to see a $7-10 plus move on a good short squeeze day. If you get a $3 or $5 move, I don't really consider that too much of a short squeeze on SPY. A short squeeze on SPY is a $10 move, $8 to $10 plus move. So that's why I was not afraid to take calls right here. I took the 43.70 calls at 670, and then went from 670 to 1020. They went green. SPY went green. It got rejected. It bounced around PDC, which is this white line. Then I took calls at 341, which was right here. Thinking we were going to push in today, which we did. It's been rejecting this 436.50. Rejected here, rejected here, rejected here. Came back down. Once it came back up, once it broke above that area, I grabbed it. I grabbed the 43.70 calls at $4, and they went from $4 to $12.80, so they went 200% right there. So it ended up being a really, really good play, end of the day play on Friday. Usually Fridays have not been good end of the day plays, but it was OPEC and it was a monthly expiration. You do see a little bit more movement on monthly expirations. So yeah, that was the week. So it was pretty crazy. For the put to call ratio is right now is still kind of high. It's at 0.76, but it's dropped quite a bit because it was over 1.02 or 1.03, and it dropped down to 0.76. So it's dropped quite a bit. It's still high, but not nearly as high. So could end up seeing some action this week. But anyways, that was the recap. Hope this has helped you understand what I did. Plus, when I do the recaps, it helps me understand. Like I said, when I look at the timestamps, I should be able to look right at the chart and say, this is where I took it. And then when I look at the chart and look at the timestamp of where I played or the where I actually played and it doesn't match up, I'm just like, that leaves me scratching my head and saying, okay, I screwed up. I did something stupid. So anyways, that's it for the recap. Thanks for watching.